Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Wednesday the 17th of April 2013. Well, we've had a bit of divergence in the market. So we've seen the FX market continue its recovery. Likewise, gold remains at its highest level in the last kind of couple of days. Hasn't managed to get above that 1400 level, but it certainly is above those kind of sub 1320 lows that where we were earlier. Added to that, but stocks have actually gone in the opposite direction. So we've seen European stock markets sell off. So that's where we're seeing divergences. That's where we're seeing fundamentals really shine through. With weak economic data, particularly out of Germany, actually start to reflect on the DAX, for example, which is moving in the opposite direction of the S&P. So right now, stocks look more vulnerable than FX does. Now let's take a quick look at FX. This is the euro. We haven't had too much economic data out today. We have still got political issues in France. They're giving their budget today, and we've got those presidential elections in Italy. But neither of those are real market-moving events. Remember, the presidential election is not as important as the prime ministerial election, and it's not a general election. So that's a key thing to watch. Parliamentarians vote for that. With the euro, though, the reason why I'm showing you this is because of yield. Yes, economics do matter, or the strength of an economy does matter for a currency. However, overall yield is the biggest influencer, and sometimes, as we saw yesterday, we've seen CPI in the US come off in March, so it fell in March. That gives the Federal Reserve a bit more wiggle room, really, to keep QE3 in play, and that's had the effect of boosting the yield spread in the euro's favour. So we've seen German Bund yields move at a faster pace than US Treasury yields. That was given the boost yesterday by that CPI data. So that's helped with euro. We've got it back above those levels. We're currently testing above the 100-day, or around about the 100-day moving average at 131.70. Above there is a very bullish development for this cross, although we have heard that there are some selling orders out at 132.50. But we do think that the downside is it's pretty much supported there now at 130.70, which is the 50-day moving average. So do watch out for that. The other cross that we're looking at today is the Canadian dollar, so dollar CAD. Let's take a quick look at that chart. As you can see, dollar CAD been very, very choppy. Had fallen, then it's recovered a little bit. Now we're currently, the downside seems to be supported at 101.80. Currently round about that 102.30 level. We're above there. That's the daily pivot. That suggests that the bias is mildly higher. Now, we have a Bank of Canada meeting today. We expect them to be more dovish than expected. And if that is true, then we could get back to 103.20 in dollar CAD, and then potentially to those 104 highs. So the 12-month highs being just above 104, 104.15. But we do think that this Bank of Canada meeting could be a bit of a watershed, with them really dismissing the last residues, if you like, of potential future rate hikes, because the economic data in Canada has been so weak, including the largest fall in full-time employment in March for nearly a decade. So they've got a lot to discuss, a lot of fat to chew over at the Bank of Canada, and we think they're going to come out on the dovish side. So do watch out for that. That announcement is at 3 o'clock London time, 10 o'clock Eastern time. Good luck trading today, and please do join us tomorrow for more. Thank you.